Here comes trouble.
Here we go. How's
You
it
may,
going, guys?
Careful, Blake. You have an eagle over your shoulder.
yeah, it's my guardian angel, my guardian eagle.
Love
Nice.
that.
Well, awesome to have you. Elliot, you want to get us going here?
Yeah. We're here today, obviously, for a fireside chat with Blake Bartlett. Of course, before we start, always like to kick things off with a quick icebreaker. And I think keeping with the trends, AI has been a hot topic. Curious to know, how have you guys been using AI, not in your work life, but in your personal life? Pete, do you want to start us off?
I've been using generative visual AI stuff like Midjourney and what's the other one? Stable Diffusion. I forget which one is in the Discord channel to generate Pokemon images for my 5-year-old. Obviously, right? So, like for instance, if you want to create an image of a giant Pikachu attacking the Golden Gate Bridge, you can do that. Blake, what about you?
Well, I am much more pedestrian than that. I would say my primary benefit or sort of use of AI is when it's embedded in other products. So, like, I basically live my life when I'm not working inside Spotify, whether it's on podcasts or music. And so I see the recommendations getting better every single day. So I'll
Ooh,
take it. But that's probably where it's having the most positive impact in my life right now.
nice,
Oh,
nice. Well, try out the Pikachu.
love that. Yeah, personally for me, it's honestly been helping with me in the kitchen. I'm a terrible cook and terrible at meal prepping, so it's just like telling the chat GPT what I want to eat, like how many macros and all that good stuff, and it just spits it out for me for the week, and it's saved me so much time. It's been really good. Okay, it looks like we have a few more folks in here, so I'm gonna get things started. Of course, we're here for the fireside chat. Super excited about the content and takeaways everyone's gonna be getting out of this event. Today's event is brought to you by the team here, Modern Sales Pros. For those of you who are not familiar, Modern Sales Pros is the world's largest and highest quality community for those in sales and management, sales leadership, sales and revenue operations, and sales enablement, aka our Modern Sales Pros. Our mission is to create an environment for members to answer questions they struggle to solve on their own and help them see around corners they may not know about. We do that through live sessions like this, an online forum, and our quarterly summits. If you're not already a part of MSP, you're going to be invited to join after this event. Go over some quick housekeeping notes. First of all, this event is being recorded. You're going to be able to access this recording and the key takeaways on the previous events page of the MSP website. If there's any questions for our panelists, please do use the Q&A function, and they're going to do their best to get to them during the event. Okay, I'm going to hand things over to you, Pete, now. Talk about Atrium and do some intros. See you at the end, guys.
Cool, killer. Blake, thanks for joining us, man. Hey, everyone. For folks that aren't familiar, I'm Pete Kazanji. I'm one of the founders of Atrium. In short, Atrium makes what we call data-driven sales management software that helps sales organizations use data to improve the performance of their sellers. And so what it does is it continuously monitors dozens and dozens of AE and SDR KPIs and then proactively alerts managers, leaders, et cetera, operations when something's off with your reps, your teams, et cetera. And so the whole idea here is that you can get ahead of things, right? Managers can get to coaching insights faster and then drive positive behavior change. And so one of the best things about this is it takes about 2 minutes to set up an account via read-only connection to your Salesforce account. So pretty fun stuff. We're gonna, for folks who are joining us today, if you'd like to get one of these sweet sales nerd hoodies that we have, because Lord knows that the MSP community is replete with sales nerds. We're gonna go ahead and drop a link here, and you can sign up for that. I'm our model here today, and I can tell that I get lots of compliments on them, riding the subway. So we're gonna get going with some intros here. So as I noted, my name is Pete Kazanji. I'm one of the founders of Atrium. Prior to Atrium, I started a recruiting software company called Talentpin that was acquired by Monster Worldwide in 2014. And that was really kind of like my first sales experience, was going from a business generalist founder at Talentpin to our first seller, sales manager, and sales leader. And that's really where I kind of like became familiar with operationally excellent, analytically excellent, what I call modern sales. Subsequent to Monster, started the modern sales community. So now 30,000 plus sales operations and sales leadership folks, and then wrote a book on startup sales called Founding Sales. So think about sales a little bit here and there. Blake, you want to share with folks kind of what you spend your time on there at OpenView?
Yeah, definitely. So Blake Bartlett, I am a partner at OpenView. OpenView is a venture capital firm. We're based in Boston, but we invest everywhere as a firm, super focused on B2B software, have only exclusively in our many-year history, we've been around since 2006, we've only ever invested in B2B software, so SaaS and infrastructure. We also are pretty stage specific. We call it the expansion stage, but really think about that as investing immediately post product market fit, when the market starts to pull and you start to get customers, but there's still a lot of repeatability to build, a lot of team to build around that. And so that could be a Series A, B, or C. I've been at OpenView for the last 10 plus years. I've led investments in companies like Calendly and Expensify, Highspot, and a bunch of others as well. The other thing that I'll say about OpenView is many people know us for product-led growth, which I know we're going to talk about today, but we did coin the term product-led growth at OpenView back in 2016 and have been talking about it nonstop since then. And it's been really cool to see the way that that's spread to the rest of the software ecosystem. And we've obviously been investing in it nonstop since then as well. We were big investors in Datadog, and I already mentioned Calendly, Expensify, and a bunch of others that leverage the product-led motion. So that's the quick once over on me. And I've been, before OpenView, I've been a VC my whole career. So I've been investing in software for about 16, 17 years now.
Nice. Excellent. Well, super pumped to have you here today, Blake. I think what we can do, I would love to start with some, I think some stuff that's kind of top of mind for a lot of our audience here. So our audience, of course, is sales management, leadership, sales operations, and what have you. And I think that everyone is probably feeling a little bit of like a win rate drag from the rise in interest rates over the last like 12 months or so. And I think one of the things that a lot of times, when folks had either product-led, growth motions or like product-led sales motions with an anticipation of like landing in a small slice of the organization for initial transaction, the kind of like new procurement environment is impacting that motion. Right. And making it such that people who previously could sign off on like a $5,000 transaction or a $10,000 transaction now can't sign off on anything. And so I would love your kind of perspective on how that modifies how organizations should be thinking about their go-to-market and like what you've seen in your portfolio companies.
Yeah, so I think at the highest level, we're clearly in a very soft demand environment right now. A few years ago, not that long ago, for quite a long period of time, there were software budget dollars falling from the sky, and it wasn't really that hard to get them in the big picture. Now they are no longer. It was raining left and right, and it is no longer raining. We are in a drought right now. So yeah, that is definitely the dynamic. But what does that mean from a sales strategy standpoint? It means let's bring in sort of classic ways of doing sales. You always need to think about the technical buyer and the economic buyer. And we've been in a world when you're in a bull market where the technical buyer rules the roost, or sort of your product champion. It's like, I'm the VP of marketing. I need this marketing tech solution. And like, it's what's going to allow us to, 5X our growth this year. So like CFO, please sign the check. And the power dynamic has shifted. The economic buyer has always been the equation. But when you shift to a bull market, from a bull market to a bear market, and when that happens overnight, guess who gets all of the power? It's the economic buyer. Yeah. And so they've always been in the equation, but now they sort of are leading the charge. And so I think, going back to sales principles 101 of like making sure that who the product champion and the sort of technical buyer is, but even more importantly, identifying the economic buyer, whether it's the CFO, whether it's somebody else, early in the process and pulling them into being a part of the equation. That's more important than ever. You can't just wait till the last minute and hopefully they put their signature on a piece of paper. So you got to identify the economic buyer, bring them into the equation much earlier on, but then you need to speak their language, right? Which they don't give a shit about, sorry, excuse my language, but they don't give a shit about features and functionality and sort of whether the users love it or not, or whether it's sort of like has cool stuff under the hood and whether it's innovative. They care about the business case, right? And business cases these days and business value, a lot of people say, well, look at all the time you're going to save. Look at all the productivity and efficiency gains you're going to get. That ain't enough to get it done these days. You got to go to hard dollar ROI, whether that's hard dollar cost savings ROI. You were previously spending this much, you buy my solution, you'll like get this TCO, savings or whatever it may be. And it's real and I can prove it to you. Or even more importantly, or sort of more powerfully, if you are sort of closer to revenue and you can influence revenue and it's really demonstrable and attributable, that's always sort of the king of ROI and the king of business value is driving revenue. So yeah, you got to go to the economic buyer and you got to speak their language.
Yeah, and I think that doing that early on, I don't think it like nukes a product-led motion necessarily. It just like changes it in a meaningful fashion. I know Josh Kopelman had a really great blog post a long time ago in a galaxy far, far away called the penny gap, around like paying. And so I think that the notion of like if you have something that if your product is architected in a way that it can actually drive like free usage, that can continue to be great. Now you may not be able to drive a transaction with like a individual plan or what have you, or a team plan. Like the team plan may have gone away, right? The free usage can still be very helpful, right? In seeding the organization. And then early on, what you're going to need to do in those sales motions is jump up. This is actually something that we've done quite a bit because Blake mentions Datadog. A lot of people think of like Atrium as kind of like Datadog for sales organizations. And so originally we had kind of like patterned our sales motion after the Datadog sales motion. We're like, takes 2 minutes to set up, land with like an SDR leader, an SDR manager, an AE manager, and an AE leader, or what have you, and then drive to initial transaction with them, irrespective of engaging with like sales operations or like let alone like a CFO or what have you. Now it's been less of like a sales assist motion like that, and it's more like, hey, here's this thing, and then we're going to jump up to see if there's an initiative, right, that can go across the entire organization. If there's not, we're going to close lost it. We're going to be on our merry way. There's no such thing as like, driving a single seat transaction for this sales manager, even though the other 10 are not using it. So that's been something so I think folks should think about how they should be modifying their sales motion in that regard. Generally speaking, if you have like a free trial or like a product, like a live POC or what have you, you should probably still be leveraging that from a demonstration of ROI and what have you. It just doesn't mean that you're necessarily going to like get people to like trip into a transaction or what have you. And then the last thing I'll kind of note there is that what can be helpful here is, reconsidering your segments. So a good example with us at Atrium is previously we kind of had like two kind of segments. There was like the series, like, Series C, Series A, Series B startup. And like who maybe didn't have like pretty much any instrumentation of their sales organization, even though they only had like 5 or 10 or 15 sellers. And then there were like much larger organizations, so like 50, 100, 150 sellers or what have you. These folks over here oftentimes would not have had like product market fit or repeatable sales motion. These are like a real business. And what we have found is that Atrium is more and more valuable for these large organizations insofar as once you get beyond like 5 or 6 or 7 sales managers, you want them to start managing in a consistent fashion. And so what organizations now do is they will playbook like how their sales management motion in Atrium with various like metrical assets that are then templated out and go to the various managers. That is that is an incremental value proposition that shows up to these larger organizations that is absent. These folks down here, they're like, we have no visibility. We have 2 managers. They can manage, by the seat of their pants. We have exited that. More like we have a bunch of customers who will come inbound, like people will land, like former users will land at those companies. We'll still sell to them, but we are not pursuing those organizations at all. And so folks who are listening at home can kind of think about that, like, okay, cool. Maybe I should go fishing where the fish are, right? And where my lure is particularly attractive, and that may have changed, right? So one thing we kind of I noted there was this notion of, hey, if you've got like if your product is architected for, a POC or a trial or like, some sort of PLG motion, that's all well and good. Not everybody has that necessarily. What's your kind of perspective on some of the like PLG light or PLG like fakesies companies out there that can allow for a very rich demo or like demonstration, like the Reprises of the world, the demo stacks of the world, the Turials of the world, what have you, without having to do a very heavy engineering lift in order to like figure out how to make your product bite-sized.
Yeah. So maybe before getting to that specific thing, let's take a step back, and we'll get to that. But I think putting product-led growth in context is important here. So if we rewind the tapes all the way back to, multiple decades ago, the only way that a buyer could learn about a product in the world of, this is like the 1990s, like 1980s, was to have an in-person meeting with a salesperson, right? This was the world of field sales. And so I want to learn about a product. Great. I'm going to set up a meeting. They'll bring 6 people into my conference room and we'll sort of spend the whole day together. We'll get a steak dinner at that night, right? That was how you learned about products. Things moved to the cloud. And, also the buyer of software shifted from being a technical buyer who like thinks about IT and IT compatibility, CIO, to sort of line of business, right? So the VP of sales starts buying sales software, the VP of marketing buys marketing software, and so on. And that was enabled because things moved to the cloud, and it's no longer about sort of installing it into my data center and is that going to work? It's, anything can be accessed through the web browser. So line of business executives became the buyers. But guess what? Line of business executives have a day job, which is running their team and achieving goals and KPIs and all of that kind of stuff. They don't buy software for a living. They're not technology purchasers for a living. Right. So that created an appetite and a need for them to self-educate, right? And this is where we saw the sort of the dawn of, 10, 20 years ago or 15, 20 years ago, the dawn of content marketing,
inbound marketing,
marketing automation to sort of help nurture somebody as they're self-educating through this journey. And then once they've sort of done their own vetting and said, yeah, I want to buy a product in this category. And yeah, I've whittled it down to 2 vendors. Now I'm going to engage with those 2 vendors. That was sort of, marketing automation kind of from when SaaS really sort of came to the equation. Now we're in a world where, the average B2B product is now much more like a consumer product in the sense that anybody in an organization can find it and can self-serve sign up for a free account or a free trial through through product-led growth. This is PLG. But really, that's just kind of a continuation of what we had seen happening before, which is people want to self-educate. But now it's no longer just an executive of a department who's self-educating through reading your blog posts and attending your webinars. It's an actual user, which could be an end user, an individual IC. It could be a manager. It could be a team leader. But they want to actually experience the product, and that's how they're self-educating. And so you need to sort of adapt your product and your customer journey to match what the customer expects and wants. And so if they want to self-educate all the way down to experiencing the product, and that's the way that they're vetting vendors that they might consider, a much larger engagement with, you got to meet them where they are. So that's the context. But, there are certainly certain products that are much more conducive to, that sort of try it and figure it out. And, things that are applications, Slack, Zoom, Calendly, all of these things, pretty easy to sort of kick the tires on. There are applications that are much heavier, right? Things that are closer to, mission critical processes in an organization. If you're an e-commerce business, if you're Nike and you want to switch out your e-commerce engine, you're not going to just like give it to some intern to figure it out and like self-serve sign up for something. It's a really big, serious business decision. So when the question becomes, is PLG sort of just not in any way applicable to those organizations that might have a more, a higher ACV product that is a considered purchase, that really needs a real business case from day one out of the gates and then has real implementation post close, is PLG just not relevant there? No, PLG still is relevant. People still want to self-educate through experiencing the product, but it's going to look different. Instead of using it in production, it might look like using it in a sandbox environment. It might look like Reprise and Novatic and a lot of these products that are sort of giving you, it's not a demo where somebody is sort of just doing a screen share. You can actually click around and see what it's like to use this product, but it's with dummy data, but it's still interactive, right? You can get that sort of experience of value. I think that, that as a means to help people, self-educate the way that they expect they can self-educate today through experiencing the product, that is a really good enabling tool. There's other ways to achieve it. There are other ways to PLGify something that, kind of fits into one of those bigger categories. But I'm all for sort of doing anything you can in your power to adapt to the customer journey that folks expect today.
Yeah, and I think the reality is that like one of the jokes I like to say is that like Zoom ruined it for everyone. Insofar as people have a lot of like buyers have an expectation to use software, and they're not necessarily thinking about like what is required in order to get like the thing to a usable state. Um, and so like the Zooms and the Slacks and the Notions of the world, they all have what I like to call like thin use cases. Like Calendly is a great example, like thin use case. And especially for like a non-technical buyer, or sorry, non-technical user, they can kind of like figure it out in a hurry, right? You would never say that Datadog has a thin use case, but the user is a total propeller head, right? So it doesn't actually have to be simplistic because that person can use it and in fact relishes the the experience of getting their hands dirty and getting in the weeds and what have you. And so I think that understanding who your user is and then what is required for them to have a aha moment is a very powerful thing. And so like if you can't atomize your product to get it there, like good example of that would be like the joke I always like to say is like, Workday is not going to sell PLG, right? Like nobody's like, hey, you know what? I should test I should bring in another a Gorilla HRIS alongside my existing HRIS. Said no one ever, right? Like an applicant like ATS or what have you. But in those situations, you can still have like you still want to evoke that aha moment, whether it's like self-serve or with a product specialist as well. And I think that that's where a lot of these guided experience or what have you tooling can really be helpful, especially in a current environment where one of the jokes a buddy of mine likes to say is that like PLG is a really great way of turning operating expense into capital expense, where you take a bunch of engineering salary expense and you turn it and like essentially you create this thing that ideally raises win rates or compresses deal cycles or like lowers customer acquisition costs or whatever. All of those are like ongoing things, right? And so in a current situation, where capital is scarce, it might make more sense for you to like eat a higher CAC on a longer term basis versus doing like a big investment. And then or you might be able to do kind of both and like have your cake and eat it too, by rather than doing a big PLG feature build or what have you. Instead, you're able to, kind of swag it, right, using one of these guided experience products and what have you. Yeah. What about so question for you, Blake. I know that there still are a lot of like even in the current kind of like non-ZIRP environment, zero interest rate phenomenon environment. What's anti-ZIRP? Like MERP, like LERP, large interest rate environment.
Yeah.
Like even if so we're talking about how you may not like it may be the death of the team plan or whatever, at least like the team plan is going on vacation for 18 months perhaps. There like you still have organizations who are using self-serve software, especially if it's free and has like some sort of rate limiting or usage limiting functionality. And then organizations who are trying to pay attention to like where their users are using it and like where they have like criticality in different accounts have historically struggled with that, and have been thinking about how they can kind of pay closer attention and understand which accounts are starting to boil such that they can then tackle the economic buyer, what have you. How have you seen organizations successfully do that? I know that there's doing like kind of rolling your own, there's some products that are out there, kind of what's your take on that?
Yeah, well, people are referring to this increasingly as product-led sales or sales in a product-led environment. And if you think about it at scale, if you have a product-led growth business where like Calendly or Miro or Notion or Airtable, I mean these types of products have millions of users.
Yeah.
So and they
don't have a lot of needles, a lot of hay.
Exactly. They don't have millions of sales reps. And so they might have 10, 15 sales reps. So who the hell do I call? Right. And so having some intelligence to, make sure you're calling the right person at the right time. Obviously, that's always the challenge in sales. But guess what? Now you have data from product usage, plus all of the other sort of, firmographic data that, you can get from enrichment solutions and stuff like that, which has existed for a while. But you combine those two things, and really, I think first and foremost, besides a tool or the means that sort of allows you to get this visibility and understand who to call when and why, it's, well, what's the metric that we're going after? And people for a while have been talking about things like PQLs, and that's great, but that's just a lead that sort of is exhibiting sort of behavior and activities that are advancing their journey and their usage of your product. So that's good. That's important. It's not a dead lead. It's not somebody who signed up and never activated. But what if that, PQL is, in a 3-person shop? Is it worth a salesperson's call? No. So you need to correlate, where do you have PQL activity within an ICP account? Yeah. And when you have those two things, you check both of those boxes and they converge together. Increasingly, people are calling those PQAs, product qualified accounts. There's the right activity and they're advancing in their journey and they suggest that they want to go and further in their journey and maybe buy a paid plan, and they're in our ICP. This is a really good candidate. Let's reach out and call. And again, there's lots of solutions, whether it's a product-led sales platform, like an Endgame, like a Pocus. There's a lot of players that are going after that opportunity, or whether it's something you wire up on a more first-party basis. A lot of people are approaching it different ways, but I think, doing something here, based off of the data that you're getting through your PLG product is incredibly important.
Yeah, because we don't have a PLG motion. We have a sales assisted motion there. So our account executives are like working with a dozen or so folks who have like a live Atrium account going on. So we don't have that full kind of like needle in a haystack situation going on, but it's important for us to pay attention to like whether or not it's more like, are they getting it? Are they like using it a little bit? It's not like a proof of value sort of, it's a proof of concepts. It's not like, hey, I'm running my sales team out of this, we'll do longer term things like that, like with like large organizations, like a structure pilot or whatever, 30 days or what have you. But what we use there is we use this software called Census that allows us to send, usage data out of our cloud data warehouse. We use Redshift because, again, we don't have like super high scaled data into our CRM. So we actually have a bunch of usage information as like little integers on the contact object, and then like our reps are able to look at how many page views somebody's had in the trailing 7 days, when their last login was, how they're using different features, so on and so forth. So even if you don't have like even if you don't have the needle in the haystack situation, product usage data in a pre-transaction environment can still be a very powerful thing. Even down to like having like live analytics. So like as an example, we use Full Story in our organization for our product function, but then like the AEs will occasionally like pop in and like see what someone's like goofing around with. And people really, really like it. So even if you have like a heavier sales motion that's not like pure product led, there's a place for kind of like usage data to understand, even just like from a qualification standpoint. If someone's like mid funnel and they're like, yeah, I'm really into it, and you're like, cool, like you never logged into this thing that you begged for, so I'm actually going to shit can you, right, and spend my time on like more, on more important things. The other thing I wanted to ask you about is kind of like, I don't know, like PLG and like usage-based pricing. I feel that they're kind of, I don't know, they're not like related, but like, and they're definitely not like yin and yang, but they're definitely kind of like two things that are happening at the same time, both of which just reduce like transaction friction, right? Because like that's all we all are, revenue architects that are in the business of just like making the machine run faster. And so like to the extent that we can compress sales cycles and enlarge win rates, like we're all for that. One mechanism you might do that is like having a oh wow moment from a product experience standpoint. Another way of doing that might be making it such that you price in a way that's like low risk, which is usually what like usage based pricing is. I think when I was doing my pre-call planning for this, I saw that you are an investor in Logical. I'm actually buddies with Andy over there, and I think that they actually had a pretty big impact when they moved from being, contract based to like usage based. Do you have a number? Like, do you have other portfolio companies that are like that do usage based pricing, and how has that like impacted their go to markets?
Yeah. Yeah, we have a lot of folks that leverage usage-based pricing. It's not sort of a, there are some products that just will make sense to, price based off of seats. But increasingly, I think you're seeing more and more usage-based pricing opportunities. Taking it back to one of the classics for us, Datadog has usage-based pricing. Based on number of nodes that you
hosts. Yeah. Right.
Hosts, yeah.
Yep.
And so, they also have, a free offering. And so you can kind of do the PLG journey as an individual developer, DevOps individual, get that sort of proof of value by monitoring a couple of hosts or a couple of nodes for free. And then once you trip the paywall, you're not sort of going from 0 to 100K contract. You're swiping the credit card and you're paying $10 a month, and then you're paying $20 a month, and then it's 50. And then at some point you get to, okay, this thing is scaling, the spend is scaling on this thing. Are we actually serious about this product? And it catalyzes a sales conversation, but it catalyzes a sales conversation after the product's already in deployment. They've already started a commercial relationship with you. And now it's about like, how do we right size the value here versus how do we go from not paying to paying? And there's going to be a huge step function change. So yeah, usage-based pricing can be a great way back to what you were starting with, which is like, maybe we're seeing that the team's plan has gone on vacation for 18 months. Again, a lot of times that's because you're trying to take somebody from 0 to 25K of ACV or 50K of ACV. But what if it was more of a gradual step to get there through usage-based pricing?
Yeah, I think that's so one of our investors over here at Atrium is a gentleman named Mike Marg, who at Craft Ventures, who was a sales leader at Clearbit. He was previously a sales leader at Slack and a sales leader at Dropbox before that. And we were, talking about this exactly. And I think like the kind of metaphor that you had there was just like jumping from this to this might kind of be like a bridge too far. Like previously might not have been a bridge too far, but maybe now it's a bridge too far, right? And there might be an opportunity there to say like, oh, okay, what is the 5 or not even 5K ASP? Like what's the what's the couple grand, right? Like what's the $99 a month version of this? And it may not, unfortunately, like may not jive with like your buyer or with your product or like how it's architected, but I think it's a worthwhile thing to kind of consider there. Changing gears a little bit, I know that you are, so the audience here is a bunch of sales leaders and sales operations folks and sales enablement folks and what have you. And I think that you're an investor in a number of or a couple of sales tech companies. I know that like Highspot is one, and actually it's kind of funny. There's I think you could call Calendly sales tech. Let's call it sales tech. And then there's Highspot, and like, could you think of like a more different sales motion, right? One is super peak PLG, super thin use case, and then of course the other one is like it doesn't really like Highspot isn't all that terribly compelling if you don't have like content to put in it, as an example, right? So like it's I think it's a great example of like a very considered purchase and what have you. What's your kind of like why has sales tech historically been something that has been interesting to you, and perhaps maybe Calendly, you didn't view Calendly as sales tech and instead you viewed it as like a hockey stick, irrespective of the like the category that it's in, but like maybe you can share a little bit about like your perspective on sales tech and why it's interesting to you or not.
Yeah, well, it's interesting, in the sense that, back to when I was talking about, the shift to cloud, which is, now sort of old history. But what was really pivotal there was the shift in who buys software for an organization. Yeah. And so with that shift towards, the VP of sales or the CRO buying software for their organization, the things that they care about, they're going to want to see, how can I drive revenue? And, products that sort of either give you more intelligence to call the right people, give you more automation to give you more leverage and more coverage. All of these things drive revenue. And they also sort of advance the sales motion and sort of take you further into the future of things that people always say, like, wouldn't it be great if we got to some, sort of envisioned future or some promised land? And technology is a lot of times the way to get there. What if I could be on every single call that all of my reps are doing, and I could know when they say something they're not supposed to? Well, guess what? Calm exists now, and Chorus exists now. It means to sort of allow you to have this sort of dream state that it's not just sort of an ideal state, because it sounds like, hey, that'd be great to have all of that information at my fingertips, but it will drive revenue because then I can make different decisions because of it. And so, back to like, what is the king of all, business cases that can be made and ROIs cases that can be made? It's revenue uplift. And so the more that you can sell to revenue teams, sales and marketing, you can just build really, really big businesses. Now, it's not a silver bullet because like everybody gets that. And so there's 1,000,001 sales tech tools out there. And stacks don't grow infinitely, and they're actually shrinking right now because people are really sort of lasering in on what actually drives the value. So it's not magic, but if you nail it right and you thread the needle right, it obviously could be incredibly powerful.
Yeah, I think I had a similar kind of conversation with David Sachs from Craft Ventures. He joined us for a fireside chat at a MSP virtual summit a few quarters ago, and he had a really interesting point, which was that like they do a lot of sales tech investing, right? They're investors in Atrium, they're investors in Orem, they're investors in Scratchpad and Sendoso and so on and so forth, number of others as well. And one of the things that they historically they've been more metrics based, had been more metrics based investors, and still are, right? And one of the things they observed was that these companies that were jumping out very quickly in terms of revenue acquisition had a tendency to be sales tech. And as we were talking about it, what we kind of hit on was like, well, if the mechanism by which you transact is a business case, like probably the most compelling business case, of course, is going to be a revenue uplift business case. So that would tend to give you a tailwind. And then the other thing that we kind of talked about that was kind of interesting was this seems to also mix very well with product-led growth, or as they kind of, because that's the OpenView terminology, and they call it bottom up and blah blah blah, right? You guys, sharks and the jets, right? And one of the things we kind of realize is that because salespeople have incentive-based compensation, what you have is you have all these little economic actors who have every incentive in the world to constantly be looking for an edge, because it actually impacts their paycheck, right? And so what that kind of, it's kind of like Ronald Coase's theory of a firm, right? Like, people making decisions to go like outside of the organization to get something, right? Versus something that's been provided internally. In this case, it's like SaaS allows us to do that versus it being like a graphic designer or whatever. And then also what you have is this like these like little economic actors who are constantly making decisions, right? And I think that kind of pointed out what they realized was like, oh shoot, this is something like those patterns of like commission-based humans who then like when they then prove that it like raises win rates or whatever, they can go to the CFO or the controller and say like, hey, look, this raised my win rate, or outreach, it allowed me to like book 50% more meetings, or fill in the blank. Now, like, there's no reason why you wouldn't transact in that regard. So I thought that was like a very thoughtful thing that he kind of was sharing.
Yeah, definitely. Or the sales leader can also say, okay, this one rep is like dramatically above quota. Like, hey, dude, what are you doing? Like, how are you so good quarter in, quarter out? It's like, oh, well, I found this this cool little tool, or I built my little stack this way. And guess what? That sales leader is going to want to do, like, all the reps get that, like, hey, CFO, like, please give budget. Sort of deal. So yeah, it's one way or the other. Like, if it works, it will find its way towards wider adoption.
Right. But I still think you like those folks, those sales motions are not, I mean, this is one of the things, like Atrium has whatever it is, like 300 customers. And like we see thousands of sales organizations, like performance data, including organizations that are in the sales tech space and like outside of the sales tech space as well. And all those folks have also had negative impacts on their win rates in the last few quarters. So I think it's one of those things where it's like, even though you might have a situation where, you know, I think you have a rep who like figures something out or what have you, and like wants to buy this thing, the response still might be, yeah, no, use what we have, right? And so I think that that's, you know, just goes to show you like why a sales assist can be very important there, and not just like a sales assist for a small transaction, but a sales assist to like jump up to a much larger transaction, or just like disqualify it in general. So one thing, like how long do you think this is going to be a pain in every all of our audience's butt, right? Like these depressed win rates, these elongated sales cycles, et cetera. I think everyone is probably, you know, yearning for the days of 2021, right? You know, probably unlikely that that organization that will see sales physics get back to that level of like speed and kind of like promiscuity and what have you. But, you know, what's your kind of perspective on how long you see this, you know, kind of being a drag on sales performance?
Yeah, well, my crystal ball is not clearer than anyone else's, but I don't think it's not sort of you know, a quarter from now. It's likely to be that, you know, 2023, you know, most of the year, maybe we see a change towards the back half of the year, but, you know, we're probably going to be in a, you know, continue to be in a soft demand environment most of this year. And I think the real question then is when, you know, it feels like, this is a total guess, but it feels like it should get better in 2024. And is that sort of like right out of the gates, it's better in Q1? Does it happen sometime mid-year? I don't know, but, you know, that sort of means that we're likely at least 12 months away from seeing like demand really, you know, thaw to a level that is much more attractive. Now, I think a lot of folks are thinking, when does it go back to, like you were saying, when does it go back to 2021? I really liked that. I want that again. It probably ain't going back there for like a decade or more. Like that was a bubble, right? That was like, you know, a lot of activity happening that was you know, kind of hard to sometimes make rational sense of. And it was really, really great time to make money, great time to sort of you know, be doing even what I'm doing. You know, we sold a bunch of companies, all this stuff, but, you know, that was kind of a blip. And those things happen sort of every, you know, decade, every couple of decades. So I think the question is not when is it going to go back to 2021, but when is it going to go back to normal? Just where people are, you know, if the ROI is there, that they're allocating budget and that things close on time, and, you know, that it doesn't have the sort of hang up in procurement, hang up with the economic buyer that it has right now. So I think thinking about when does it thaw versus when does it magically get back to 2021 levels is the right sort of mental set point to have.
Yeah, for sure. I do think that, you know, that different organizations are impacted different ways, and I think one thing I might kind of coach folks on who are here today is like product market fit is often contingent on hurdle rate, right? And contingent on interest rates. And what I mean by that is like, one of my friends is an investor at Charles River Ventures, and he, you know, more consumer stuff. But he would joke about how like consumers can totally tell when they're getting, you know, $10 of value for $5, and like, oh, this is great, right? And like early, you know, kind of like meal delivery and kind of things like that. And I think that actually extends to organizationally as well. And so, you know, previously when like money was loose and available, and like hurdle rates like that the CFO or whoever was looking at were lower, you know, something that has like a very thin use case or like a very kind of marginal advantage as compared to something that is, you know, included in this suite over here, might have been like, all right, yeah, like, you know what, let's buy that. And also like, I'm worried that you're, you know, going to leave the organization, so I'll buy you this toy or what have you. And I think that that's changed. And so, you know, the change in an interest rate environment can actually impact your product market fit as well. And like the kind of term I like to use for that is like, you can resubmerge, right? Like you can like emerge and then like the water rises again, and like, oh, lo and behold, you're like back underneath. And so I think that that's something that's really important for sales leaders to think about. Whereas like something like you might have had 15% win rates or what have you, like just at the border of like what might have been like a tenable sales motion, and then but like 15% win rates in a 0 interest rate environment, you know, when you pop to a 5% interest rate environment, those win rates will probably go down to like a lot lower than that. And so what that means is like now your product probably has to be differentiated in a much more substantial fashion, or you have to change your segment, or how you change how you frame it or talk about it, or probably all of the above. So I think that that's something that folks should be mindful of as they're kind of navigating this environment, that like you definitely should have a bias to action and be like changing your behavior, whether that's like changing how you're selling or changing the segment that you're targeting. And certainly your product organization should probably be thinking about the fact that what previously was viewed as like, this is pretty good, is now going to be like, you know what, this is like a total nice to have, right?
Yeah, I kind of think about it through the lens back to, you know, what we were talking about earlier, business value and value prop. When you're in a bull market and budget dollars are falling from the sky, you know, user love and time savings is enough to get, you know, a closed won deal done. It's like, hey, the users love it. They want more of it. It's saving them a bunch of time. They claim that there's all this productivity. Like, please give us $50K, budget so that we can buy the Teams plan. That ain't getting it done today. So, you know, you might have felt like you had product market fit based off of user love and time savings. And then once as you were saying, the tide rises, and that doesn't cut it anymore, you don't currently have product market fit on a cost savings or a revenue uplift, sort of value prop. And so you either have to like go build more product or sort of find a way to tell that story and show that evidence. Because the sort of stakes are, you know, the bar is that much higher for, you know, what ROI actually makes sense and what gets it done. And it's got to be in dollars and cents, and everything else is just like, you know, nice to have at this point.
Yeah, I can actually use us as an example because, you know, the kind of the cool thing about like verticalized sales analytics, which of course we brand as data-driven sales management, is like there's a bunch of different use cases. Like, oh, you've got a bunch of reps that are ramping. You want to pay attention to whether or not they're ramping healthily or not. Great, we got you. Oh, cool. Like, you know, you want to bring metrics into your one-on-ones and like, you know, coach appropriately. Great, we got you. And so it was kind of like a Chinese menu of like problems that could be solved. And so what we have, as we've gone up market and then focused in on kind of like a narrower use case, it's really just kind of come down to, do you have sufficient top of funnel and is it moving into the mid funnel? A lot of organizations already have like a forecasting story in place, whether they're like, you know, using Salesforce or Clary or Visa or Boost Up or what have you, but they lose visibility into that mid funnel and then top of funnel. And so that actually really resonates, where product's the same, right? Product is the same. We're just showing up and saying like, hey, you're probably really concerned about top of funnel right now and making sure that you have enough of it such that in 2 quarters you're not host. How do you have visibility on that right now? They're like, we have no visibility. It's terrible. Right? Great, cool. Let's talk about that. Let's turn on an account. But it's just like a reframing of to focus in on a problem that exists, like that is like has now bubbled to the surface, has really positively impacted us. Elliot, you here to kick us out?
I am. Thank you so much, guys. That was a great event. Yep, gonna wrap things up. Want to thank everyone for attending. Thank you to our sponsor of today's event, Atrium. Make sure to check them out. Link in the chat. Don't forget to grab the goodies there. Love the hoodie. Big thank you to Pete and Blake for providing the content. Recordings and key takeaways are going to be available on our page shortly. Don't forget to check out our upcoming events, and we'll see you guys next time. Take care, everybody.
Cool. Thanks, Blake. See ya.
Thanks all.